All right, welcome to The Explainer. Today we are unpacking a seriously massive feasibility study for a highly ambitious coastal development project over in the Philippines. We're going to look at the blueprints, the overarching strategy, and of course, the hard numbers behind a project that's aiming to completely rewrite the rules of luxury ecotourism in southern Luzon. Okay, let's dive into this. $10 million. I know, it's a huge number, right? That is the target investment we're evaluating today, and it really highlights the massive scale and the high stakes of this entire project. But as we're going to see, this capital injection is targeting a very specific, carefully researched gap in the current hospitality market. So how exactly is that $10 million going to be put to work? We're going to break this explainer down into a step-by-step journey. We'll start with the market opportunity in Sorsogon, explore the physical vision for the eco-resort, analyze its sustainable competitive edge, break down the actual capital expenditures, and finally, look at the math to track the projected return on investment. Starting right off with Section 1, the Sorsogon opportunity. Right now, Sorsogon is right in the middle of a literal ecotourism boom. It's being driven by these pristine coastlines and world-famous whale shark interactions. But, location is everything. The proposed site is in Bulan, which is a vital commercial nexus and the main gateway to the Dicao Pass, a world-renowned marine biodiversity corridor. By planting a flag right here, the resort perfectly intercepts high-yielding travelers right before they head out to sea. And what makes this location so incredibly powerful is just how wide a net it casts. I mean, this isn't just for one type of traveler. It targets flashpackers who are looking for modern, sustainable spaces, while simultaneously capturing the high-spend marine sports crowd, divers and yacht owners who really need professional maritime facilities. And during the off-season, well, it pivots to host lucrative corporate and wellness retreats. That diversification translates directly into year-round stability. Moving right along to Section 2, the eco-resort vision. To bridge the massive luxury hospitality gap in the region, the project proponent, Raymund M. Bongalosa, has designed this truly striking blueprint. The whole vision centers on an 8-story sustainable landmark tower that's paired with heavily engineered private marine docking facilities. Just picture this for a second. Guests are up enjoying a panoramic rooftop meal, while down below a dedicated fleet of paddy dive boats and jet skis hit the waves from a completely private, wave-break-protected marina. Sounds pretty amazing, right? So how does a physical structure like that actually translate into cold, hard cash flow? Well, it's broken down into 4 core streams. First, you have hospitality, which blends high-occupancy dorms with upscale suites. Second, you have food and beverage, completely driven by that rooftop restaurant. Then, add in marina fees, collecting revenue from berthing and fuel bunkering for visiting yachts. And finally, adventure rentals offer these really lucrative high-turnover margins from jet skis and scuba certifications. Literally, every single square foot is optimized to generate revenue. Which brings us to Section 3, the sustainable edge. And this brilliantly illustrates the contrast. In today's market, sustainability isn't just some corporate buzzword anymore. It is a massive competitive moat. Right now, the Bulan market completely lacks integrated luxury marine resorts. So this eco-resort steps in with a huge first-mover advantage, capturing the high-end market entirely uncontested, all while utilizing strict environmental, social, and governance standards to really stand out. Part of that first-mover advantage is completely redefining peace of mind. Here, safety is actually framed as a premium luxury feature. The project embeds 24/7 security and an on-site emergency response team, complete with medical triage and rapid deployment rescue watercraft. Actually, it's a highly calculated strategy to just eliminate travel anxieties entirely, making this the absolute safest high-end hub in the entire region. That strategic edge continues right through their ESG framework, too. Environmentally, they're integrating solar microgrids and a strict zero single-use plastic mandate. But what I really want you to take away here is the social integration. They have a strict commitment to source 60% of their workforce locally from Bulan. This champions the local economy while guaranteeing a deeply authentic, culturally rich experience for the guests. All right, let's get into the money. Section 4, the $10 million breakdown. Look, it's totally natural for investors to get a little anxious when we're talking about exactly where a massive $10 million capital injection is going, but this capital allocation proves the money is heavily backed by tangible, hard assets. 45% goes directly into constructing that 8-story tower. 15% secures the coastal land, another 15% builds out the heavy marine infrastructure, 15% acquires high-value fleet equipment like speedboats, and the final 10% covers security and working capital. Developing a massive coastal property definitely carries inherent risk. I mean, there's no way around it. But this allocation strategy aggressively mitigates that risk through asset-backed security. If you're an investor, your capital isn't just vanishing into thin air. It's tied directly to tangible real estate, heavy marine port infrastructure, and physical vessels that hold real, tangible market value. Finally, we arrive at Section 5, tracking the ROI. We've seen the big vision, we've seen the hard costs. Now, let's actually dig into the 10-year financial modeling. Year 3 marks the soft opening, generating a really healthy net operating income as the property starts to ramp up. But as the resort enters full, mature operations around Year 5, those high-margin revenue streams we talked about earlier really take hold, and they drive operating income significantly higher. Now, what's really interesting about these numbers is seeing the project hit its absolute peak performance. From $1.3 million in net operating income during its soft opening in Year 3, it scales beautifully. It stabilizes at an impressive $3.4 million in NOI by Year 8. That intense focus on asset optimization clearly pays off. And all of that operational success supports one absolutely crucial number: 13%. That is the targeted annual return on investment for this secured debt facility, meaning, again, the loan is backed by the resort's actual physical assets. It's a highly competitive, relatively insulated yield that's designed to attract serious institutional or joint venture capital. So to actually deliver that 13%, the repayment runway is meticulously structured over an entire decade. The timeline begins with a construction moratorium in Years 1 and 2. Then, starting in Year 3, the project begins executing equal principal payments of $1 million per year alongside that 13% return, until the entire $10 million principal is fully amortized or, entirely paid off by the end of Year 12. I want to circle back to those first 2 years for just a second, because that principal moratorium, it's an absolutely vital cash flow protection measure. By pausing principal payments during the heavy vertical construction and initial marketing phases, the resort gets a strategic runway. It allows the operations and the revenue streams to properly take flight and stabilize without being immediately dragged down by the heavy anchor of immediate debt repayment. So we've looked at the explosive growth in Sorsogon, the first mover advantage of an integrated marina, and a highly structured financial model pushing a 13% ROI. It really leaves us with one compelling question. Is this comprehensive blueprint for luxury ecotourism actually worth a $10 million investment? Because if this model succeeds, it might not just transform Sorsogon. It could literally rewrite the blueprint for coastal development across the entire country. Thanks so much for joining me on this explainer.